In this video, we will go over all of your Tesla stock news that you need to know, as well as the setup for this upcoming week and all of your economic data, including a couple of speeches from Jerome Powell and other Fed members. Which I do think the main goal of these Fed speeches this week will really be to bring down 10-year treasury yields, something the Fed's 50 basis point rate cut did not do. It actually sent 10-year treasury yields higher, which did tighten monetary policy. So first and foremost, let's go through the economic calendar. These are going to be your events that can move our markets. And there's a lot of Fed speakers, as there usually is, following an FOMC meeting, because the 2 weeks or so before the meeting, you are in what's called a blackout period, something Jerome Powell talked about on the podium just last week. So starting off Monday, you have Fed Bostic that will be speaking at 8 o'clock in the morning. 8:30 in the morning, you will get the Chicago Fed National Activity Index. This is Eastern Standard Time, by the way. And then you have S&P Global Composite PMI, Manufacturing PMI, and Services PMI. This actually can move the markets, especially if you see a big move higher or lower. You are looking for the composite PMI to fall about 1.6 points down to 53. Manufacturing to actually rise about a half a point to 48.5. And you have services PMIs that are expected to fall a little bit from 55.7 down to 55.2. And then later on in the afternoon at about 1 p.m. Eastern Standard Time, you have Fed Kashkari that will be speaking. Tuesday morning, you will get the S&P Case-Shiller home price month over month and year over year, and CB Consumer Confidence that comes out at 10 o'clock in the morning, expecting that will actually pick up quite a bit from a 102.9 to 104. So if that happens, that would be good. You want to see people with more confidence. You will get Richmond Fed Manufacturing, Shipments, and Services Revenues Index also at 10 o'clock in the morning. On Wednesday at 10 o'clock in the morning, you will get new home sales for August. You want to see this start to pick up as well, because when people sell their homes, as long as they're equity positive, then they're going to take more money into their bank account, sometimes a lot of money, and that is one area that could be an upside surprise to the economy if home sales do start to pick up. We're not seeing that in mortgage applications. We're just not seeing that yet. But if it starts to actually happen, that would be very positive for the economy. And that is pretty much it for your Wednesday. Wednesday is going to be a slower day. Thursday is when things really start to pick up. So 8:30 in the morning, you have durable goods orders month over month. Now, last month you came in at 9.9%. You are expecting negative 2.8%. Considering last month was that strong, negative 2.8% is not bad. Now, we will see these numbers will get revised. So if it comes down to like 5% for last month, then you're probably going to be positive, right, for the August data, okay? So it depends on the revisions, but if this last month's number stays the same at 9.9%, then generally speaking, the worse this number is that we get, the worse for the markets, okay? If this comes in at like negative 5%, the markets are going to say, oh, that was kind of disappointing because last month was really good and now, well, this month is really bad. But if it comes in line with expectations, that's actually not too bad. So that could be a major catalyst for this week. And really anything that has to do with the consumer, judging the consumer and how they're spending money is going to be important, because the consumer spending money is over 70% of our economy. People need to continue to spend money. If people slow down spending money even a little bit as a collective, that becomes a big problem. So durable goods orders month over month is going to be the first big catalyst for our markets. Now, the PMIs, they can definitely move things as well. But durable goods orders is the first like 1 to 2%, swing catalyst we could have that could cause markets to go higher or go lower in a big way. We will also get the GDP growth rate quarter over quarter final numbers for Q2. You're actually expecting 3% here. The last update we had was 1.4%. So pretty lofty expectations for quarter over quarter GDP. That sounds too high to me, but the higher we come in, the better. You will also get initial jobless claims, which is obviously going to be important. The initial jobless claims last week moved us more than Powell cutting rates at 0.5%, because it kind of solidified maybe the labor market is not weakening too much. We were expecting last week like 230,000 claims, and it came in at 219,000. For this upcoming week, we're expecting 226,000. So a number higher than that, not good. Number lower than that, good news. Now on Thursday, you will get Fed Collins, Fed Kugler, and Jerome Powell, as well as Fed Williams, that will all be speaking around 9:10 to 9:30 in the morning on Thursday. Now Jerome Powell is going to be most important, but I do think generally speaking, they're going to sound pretty bullish, right? I don't think they're being honest with you right now in what they're seeing in the economy. Hence, they cut rates 50 basis points. There's obviously a problem. But they are, gonna sound very bullish. So I'm sure that's gonna help markets. Now, at 10 o'clock in the morning on Thursday, you will get pending home sales month over month and year over year. And that is an important number that we want to see start to tick upwards. You will also get Fed Kashkari again at 1 p.m., a 7-year bond auction, and the Fed's balance sheet at 4:30 p.m. On Friday, you have another couple of big catalysts. You have core PCE month over month expecting 0.2%. What Fed Waller said on Friday was that you could actually see core PCE come in at 0.14%, which would actually get rounded down to 0.1%. So if that happens, Wall Street's definitely going to like that. But Fed Waller actually said that the issue is inflation might start coming in too low, like excluding shelter or assuming shelter runs at 2%, then you could actually be under 1% core PCE, and that's a problem. So definitely want to look for that. Personal income month over month expected at 0.4%. Last month you came in at 0.3%. So that's good, right? You want to see wages start to outpace inflation, and preferably by a lot, because we have a lot of catching up to do. And eventually, when wages do catch up to the cost of living, that's when I think people will feel more comfortable spending more money again. Now, personal spending month over month, last month came in at 0.5%. We are expecting 0.3%. So that would be a slight slowdown, but still not a terrible number. If that comes in low, Wall Street's going to hate that. Stocks are going to sell off. If that number comes in high, Wall Street's going to love that, and stocks are probably going to go higher. It really is as simple as good news is good news and bad news is bad news. Just for my generalized conclusion for this week, again, as I've said here on this channel many times, I'm not concerned about the economic data for September. Really, until the election is over with, I don't think we're getting the most accurate data. I actually think earnings season is something we need to be watching a little more closely, like with FedEx's earnings. The data wouldn't tell you that, but FedEx is seeing a big slowdown. Are other companies seeing a slowdown? Are they going to give us similar warnings? That's what we really want to pay attention to, because everyone else can lie to you with no repercussions. Wall Street, corporate America, if they lie to you, they go to prison. So that's really what we want to be watching out for. In this upcoming week, we don't have much for earnings. You do have Tuesday pre-market, AutoZone. In after hours, you have KB Homes and Stitch Fix. Wednesday pre-market, Cintas. And after hours, Micron, Jeffries, and a couple of others. Thursday, Accenture, Inspire, CarMax, Jabil. That's about it. Thursday and after hours, you have Costco, BlackBerry, and Vail Resorts, as well as Scholastic. I think Costco could be interesting here. Seems like they're reporting quite early in the earnings season. And if they have negative things to say or do not impress on guidance, that one could be kind of an indicator of the economy, although I think Costco has its demographics. It's not usually super low income. So if you start to see the higher income slowing down, that's maybe what Costco could tell you. But back to what I was saying, markets are really just in a sugar high right now, and I don't think we have much to worry about for September. I think the sugar high of the 50 basis point cut and the bullish commentary we're going to get this week from Fed officials is going to be enough to probably push this market even higher. Because after all, I think the economic data is probably going to come in line with estimates, and that's going to be just fine for markets. Now, I do anticipate some kind of election correction coming perhaps in the second half of October, but from now until then, I don't really see a bearish case for markets. Wall Street has their soft landing narrative. They are continuing to support that in spite of the obvious signs of maybe not such a soft landing that is coming. And until there's something to really challenge Wall Street on that, which will come in the form of economic data, then I don't think Wall Street's going to change their mind for no reason. So with that said, what does that mean for Tesla stock? Well, simply put, Tesla is probably going higher. Now, I could be wrong and the economic data could come in bad, or you know, who knows what else could happen. But unless that doesn't happen, then Tesla stock is going higher. I do think last week was a bit of a digestion week for the Fed's cut, and you know what all of this means for markets and for the economy. I do think in this upcoming week is when you could start to see more of that repositioning, and that repositioning should be taking money out of big tech, should be taking money, you know, maybe off the sidelines that just has been sitting there for a while, out of money market funds since yields are now lower, and into defensives, cyclicals, value, small caps, interest rate sensitives, right? Which Tesla fits that category about as perfectly as possible. So you also have the Robotaxi event coming on October 10th. Like, there is a clear catalyst coming up. And in the short term, it would make sense why Tesla stock would get some kind of excitement or momentum to the upside based off of that. Now, the important levels for Tesla would be 246 on the upside. If you get above 246, then you're potentially going to make that run to the 300s. If you break below 235, this gap level, that's where we start to talk about the downside here, at least back to the 220s. Could be $18, $19, $20 worth of downside. But if we get above 246, then you could be looking at an even larger breakout. And considering Tesla stock is trading at $238 per share, almost in the middle of this zone, I think this week could be important to actually confirm a breakout and start to move higher. If we don't, again, if we fall under 235, then I'll be a little bit more, I wouldn't say concerned, because I'm not concerned about Tesla. I want Tesla stock to fall so I can buy more. But in the near term, that would be a sign of more downside to come. Now, with that said, we don't have much for Tesla stock news over this weekend. Besides, the rapper DaBaby has over 35 million monthly listeners, released his new album cover with a Cybertruck. His most viewed music video ever has 544 million views on YouTube. Rapper Meek Mill also released a new song last night called Cybertruck. Tesla Cybertruck is currently the most popular vehicle in hip-hop culture. And you can see this is what the album cover looks like. Standing on a Cybertruck. Pretty good advertising. Free advertising for Tesla, that is. Now, over the past week for Tesla stock, you have seen 170 different trades in the options market, totaling about $53 million, with a positive order value of 79%. Tesla's short interest of free float sits at 2.87%. $19.42 billion currently sold short in Tesla stock, totaling 79.64 million shares. Positioning for this week in the options market for Tesla looks more skewed to the call side. Open interest is 58.5% calls, 41.5% puts, so more calls than puts. Volume on Friday was 60% calls and 40% puts, so that looked good as well. Some of the highest open interest is around that 250 call, which had volume of 45,000 on Friday and has about 45,000 for open interest now, and the 260 call, which had volume of 23,000 on Friday with open interest of 41,000. This could be a decent indicator of where markets may send Tesla stock to this week. Again, if we have a bullish week like I think we will, that's definitely the area that I'm looking at. From current prices, a rally to 250 this week would only be a move higher of about 5.5%. A rally to 260 would be about 9% higher, and that would really set us up for what would then be likely a short squeeze and a bit of a gamma squeeze as well. Some FOMO coming into Tesla, and that could push us well into the 300s. Google Trends data on net remains pretty much unchanged. Cybertruck at 47, Model Y at 22, Model 3 at 21, Model S at 10, and the Model X at 8. Sentiment for Tesla is currently neutral at 51, message volume is low at 36, and the participation ratio is high at 56 as well. Tesla continues to run about 4,000 different ads with Google, and global inventories for Tesla continue to make their way lower. Model 3 at about 4,300 vehicles in inventory, Model Y at 6,100, Model X at about 3,500, and the Model S at about 2,400. Let me know your thoughts on all of this down below in the comment section. Hit the like button as well as subscribe to the channel if you have not done so already. You guys have a great rest of your day, and I will see you in the next one.